It's just one of those cases where Saylor is digging deep, fully dug in with Bitcoin, so it's gotta work, because if it doesn't work the way he hopes, he goes bankrupt. So I don't give much attention to it, and I don't think it's a productive conversation, Charles Hoskinson had said in an AMA session. According to Charles Hoskinson, Michael Saylor and other Bitcoin maximalists remain excessively defensive of Bitcoin because they have a financial interest in it succeeding over other crypto assets. Of course, everyone is doing what it takes to defend their investment, but why is Saylor's preference considered quote-unquote toxic? Although the crypto market activity has largely been suppressed this year, several networks are still recording increased interest and activity. The decentralized finance network Cardano has added about 100,837 wallets in the month of November alone, despite the sector's recent troubles. The sector is currently operating in a bear market, with the FTX collapse complicating matters even further. According to Cardano blockchain inside data as of November 25th, the number of ADA wallets was 3 million. Cardano's impressive wallet growth can be tied to the recent increase in wallet activity because the platform has failed to witness any bullish triggers in recent weeks. A notable activity on the platform is the ongoing development of Lace, a lightweight multi-chain crypto wallet. The wallet aims to seamlessly connect elements in Web 2 and Web 3 into a single interface, with the Cardano team terming it as a game changer. Well, Cardano has always been involved with game-changing developments. In addition, the network is recording increased activity following the announcement of the launch of a stablecoin linked to Cardano. The network activity is considered one of the possible catalysts to trigger an ADA price rally. But like the rest of the market, ADA is still searching for a bottom that seems elusive amid the widespread fallout from the recent FTX crash. Technically, ADA bears remain strong. It has not all been roses and bloom for MicroStrategy CEO as well. However, being in a tight spot is familiar territory for the 57-year-old Michael Saylor. Notably, after the dot-com bubble burst, the CNBC host Jim Cramer referred to the collapse of MicroStrategy as a catalyst. The stock had hit the lows in a single day after the company announced accounting mistakes, thereby wiping out $6 billion from Saylor's wealth and marking a significant end to the high-flying days of the early internet. Later that year, the U.S. Securities and Exchange Commission brought and then settled accounting charges against MicroStrategy, Saylor, and other company executives. Saylor and his company spent 2 decades under Wall Street's radar, although this was not an indication that he suffered. Bitcoin revived Michael Saylor back to the center stage. His fear of inflation propelled him in 2020 to start investing MicroStrategy cash in the original cryptocurrency. Then the company's cash flows started getting routed to Bitcoin. The MicroStrategy CEO lined the Wall Street bankers' pockets by selling debt to raise money to buy Bitcoin. As a result of his desperation, he audaciously transformed his sleepy software company into a Bitcoin vault. So why won't he get toxic about Bitcoin? Think about all that he's gone through. It is not shocking that he became a Bitcoin preacher spewing fervent appraisals of the cryptocurrency. One of his outrageous predictions about Bitcoin was that it will eventually be worth $100 trillion. In an interview, he said, "After scientifically studying everything on Earth, I have concluded that Bitcoin is the best inflation hedge. We buy Bitcoin as fast as we can with whatever money we find lying around." He added, "If you have Bitcoin, don't sell it. If you don't have Bitcoin, buy it. And if your Bitcoin is moving around, wait." Fast forward to this year, MicroStrategy stock lost about 2/3 of its value since its peak last year, dragged down by the current bear market. It is the first Bitcoin bear market for Saylor, but he has remained resilient. In an interview, he noted that when it comes to Bitcoin, investors have to take a long-term perspective. If you are buying Bitcoin and you got less than 4-year time horizon, you are just speculating. And once you got more than 4-year time horizon, then the obvious thing is your dollar cost average, he said. The strategy of dollar cost averaging is a way of reducing exposure to the volatility of an investment. He continued, "You buy the asset you want to hold for a decade or longer, which is the long-term store of value." Michael Saylor is quite unshaken about his losses so far, but he stood his ground and advised that one should not get caught up and keep looking at the price day to day, week to week. He went ahead to compare valuing Bitcoin to valuing a house. If you bought a house and then every time you went to party, you got drunk, and then at 11 p.m. or midnight, you walked up and said, "How much will you pay for my house? I want to sell you my entire house right now," he joked. Saylor and the Binance CEO, Champagne Zhao, are singing the same song, and the title emphasizes taking custody of your Bitcoin. According to the Cardano founder, Charles Hoskinson, Saylor claims about Bitcoin are not from the standpoint of sheer enthusiasm, but likely being bound to a coin. A few months ago, Michael Saylor had proposed that Cardano ADA was a security and his favorite coin was a commodity. From his perspective, it was pretty obvious. Quote, "To be a commodity network, there has to be no issuer, no initial coin offering, no central organization, and if you study the history of Cardano, it's pretty obvious that it's a security. It checks all the boxes. So I don't know how you actually get around intellectually to convince yourself that it's anything other than a security." End quote. Quite known for his prompt responses to the reports of that nature, Charles Hoskinson likened Saylor to Tone Vays, claiming that he was too tied up with Bitcoin to the extent of seeing other coins as potential securities. It's just like a situation where your eyes are blindfolded and all you keep seeing is darkness. This further explains Hoskinson's claims about Bitcoin's maximalists being the most difficult, toxic, and useless people to engage with. The debate on which digital assets constitute a security or a commodity started when lawmakers and regulators were bent on bringing regulatory clarity to the space. The SEC chair, Gary Gensler, believes that most cryptocurrencies are securities, and this was a claim the regulatory platform proved in his legal battle with Ripple. But Hoskinson has made his point. ADA is not a security. In an AMA session, Hoskinson said that nobody controls ADA and is completely decentralized more than Bitcoin. Cardano has more use and utility, and people buy the token not to speculate, which seems like the only thing that they can do with Bitcoin. Due to its real-life use, people buy the token for its use of medical records and other productive things. This was the exact scenario that the Cardano founder was trying to paint. According to him, Michael Saylor is digging deep into Bitcoin, and if it does not work out the way that he planned, he would go bankrupt. Of course, people would say that Hoskinson's statements were kind of harsh and he needs to apologize. However, it's important to note that no matter how outspoken the Cardano founder is, he will always offer an apology if his claims were wrong. Yes, there is a scenario that also points that particular point. In a few tweets dated on August 20th, Charles Hoskinson acknowledged that Cardano's infrastructure really had issues and referred to the stake pool operation community as its backbone. With this, he expressed regret for the way he handled complaints that the Cardano testnet was catastrophically broken in the days leading up to the launch of the Vassal hard fork. He had tweeted, "Now that I have some time to reflect on the last 48 hours, I would like to say a few things first. First off, the backbone of Cardano as a useful protocol is the SPO community. It has been a rough road for everyone over the last few years, given the infrastructure needs and experiences. Back then, Cardano supporters argued with Hoskinson, claiming that IOHK has failed to support the SPOs and that respinning the testnet would be a waste of efforts, and the pressure was quite heavy. Hoskinson also added, "It's bizarre and alarming seeing these videos floating around things that are being rushed with 1.35.3. The code in question has been thoroughly tested for months by everyone including SPOs. The code that was an issue in the testnet has been removed." Charles Hoskinson apologized, although not everyone thought it was sincere. In this crypto race, everyone is looking for the perfect coin, but is there a perfect coin? Given the current situation in the market, all the quote-unquote perfect coins are hitting incredible lows right now. Saylor's claims were kind of valid. Hoskinson's explanation and defenses were also valid. There is no fight about that. Cardano ADA just needs to sail gently in this crypto market because its flaws will never go unnoticed. But of course, what are your thoughts on this? Let's have them in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.